We're going to do a brief video on gold with technical analysis and support and resistance levels. And we got a daily chart here of the gold futures from COMEX. The gold symbol is CG. It's a daily chart with a 5-day moving average in green, a 20-day moving average in red, and a 200-day moving average in blue. I'm going to show you 3 charts here in a minute, and then I'm going to show you some support and resistance charts or tables. Let's take a look real quick. Gold's put in a bottom here back in September 28th. And it looks like it put in another bottom here last week. This bottom in September 20th was 1622. It came down just like we had discussed, but it made a new low here at 1621 on the 21st of October. So that was not this week before last. This is not a good sign that it put in a lower low here. It's a very, you can easily call that a very negative sign. It should have stopped at about $22 or $23, and it didn't. So it's tested that new low. It caught some buyers here, but I think it's going to be very weak buying. I think it's already starting to peter out. You can't see it on this chart, but gold closed down Friday, the 28th, at down $20 an ounce, and so you can barely see it. It's on here, right here, down $20, closed at 1644. So not a good outlook for gold on a daily chart. Let's look at the weekly, and right here you can see this is our weekly chart. Gold closed very low at 1644. We're below the 200-week moving average, which is this blue line. We're below the 5-week moving average. We're below the 20-week moving average. It's real simple. This is not a horrible bear market chart, but it's a bear market chart for gold. You can see it happened back here in July timeframe of 2018 and rallied its way back up. It may do the very same thing again. It's hard to say, but at the end of the day, gold is in a slight little bear market, but not a very favorable situation from a longer term outlook. Let's take a look at the monthly chart. This is a 200-month moving average. You can see gold's above it, which is a good sign. You can see the gold is below the 20-month moving average in red, the 5-month moving average in green. So that's negative and indicative of lower prices for gold. It wouldn't surprise me if gold came down here to the $1,500 level by next month. That wouldn't be a huge surprise for me if it did some of that in December. I would be surprised if it went all the way down here to the 200-month moving average, this 1,300 level, but it definitely wouldn't surprise me if we got down to the 1,500 level on a longer term chart here. This monthly chart definitely doesn't look that great to me. Let's go back to the daily chart, try to get a short-term prognosis, what we think is going to happen this week. Gold sold off and settled on Friday down $20. So I already think it's sold off. I don't think it's going to sell off further right now. If it does, it's extremely negative. What I would look for gold Monday morning after this kind of sell off on Friday is I would look at a rally in gold up to the 100 and maybe 1655, 1660 level, and then see what happens from there. If we don't get that, if we get continued sell off in gold and it challenges this 1621, which would be a very good day, a very hard down sell day. When I say good, I don't mean that in a positive way. Would be an aggressive day for gold to get all the way down to 1621 Monday, and I doubt it's going to happen. But if it does, it's a really bad negative sign for gold. The most likely thing that would happen for Monday for gold is it'll sell down a little bit and then rally up again to the 1655 to maybe 1660. Not all of that's probably going to happen tomorrow. The Monday the 31st, but it's probably going to happen by Wednesday if it happens at all. If it doesn't rally, then we're probably going to take out this low next week of 1621 set earlier. So let's go back here and take a look at the support and resistance for gold down here with rbamresearch.com. We go down here and find gold. The ticker symbol is GC right here for Monday the 31st. We have 1, 2, 5, 10, and 20-day hold periods. We've got buys on gold down here 1614, 1632, 1636, and then finally on the 20-day 1640. So the net effect of all that is the high Friday was 1670, the low was 1640. So this is basically saying if it breaks down severely, then it's a buy on a one-day hold. It's 1640 was your low Friday, so that's not a big deal. Could easily hit that. Probably these 5 and 10 and 20s are probably going to get hit Monday, and this is all for entertainment purposes only. I doubt very seriously you're going to see these C1614 tomorrow. And gold doesn't trade real active on here. It usually trades maybe twice a week on these prices. S&P 500 usually trades every day, for example. But I do think you're going to get live here on the 1640 and probably the 1636 is here tomorrow. We just have to wait and see what happens. But that's your entry prices, support and resistance points. No shorts for tomorrow, just the longs for 1, 2, 5, 10, and 20 days on this is a futures contract GC at the COMEX exchange for tomorrow. the 31st of October. Remember, everything you see and hear on here is for entertainment purposes only. Can't use our information or prices for anything other than entertainment. You should always do your own analysis, and you definitely trade at your own risk. You can get all of this for free every morning before 7 a.m. at rbamresearch.com. 190 stocks, the major forex pairs, BTC, crypto, and the most liquid futures contracts updated every morning by 7 a.m. No credit card required. Access is free. Link in the description below. Take it over to rbamresearch.com, put in your email address, and get immediate access. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a great comment for us, we'd love to hear from you in the comment section below.